Hey traders, the Chart Guys Swing Report newsletter is currently live. In the description of this video, there are two links. The first is to the sign up page where you can also get emailed an example of a previous copy. And the second is to an in-depth video to let you know exactly what the Swing Report entails. Appreciate your attention. Let's get on to the charts. Hey trading friends, checking in on the broader market, and hopefully you know what I'm going to say at this point because the bulls have complete control. The bears prove nothing. The burden of proof is on the bears, and they prove nothing. We had a double top at the high of the COVID bounce. We never lost the daily uptrend. We topped out a little bit, just traded sideways, and here we are convincingly breaking resistance. And from where we stand right now in this moment, the S&P 500, or I should say SPY, is looking at a gap at 333. Actually, we got one more level. 325.85, then a gap at 333.48, 332.58 make that, and then the all-time high. So we are looking back at the all-time high, less than 5% away of the S&P 500, which is astounding, but it's where we stand. And the bulls have space to be looking at healthy consolidation to maintain the daily uptrend. If we lose the daily higher lows from here, it will still be notable. I will consider it a weekly bull break with zero follow-through into weekly consolidation if the daily uptrend is lost. But there's no sign of that right now. And the tech sector, pretty much today was the financial sector and the healthcare sector sitting on their hands doing not much, and the tech sector flexing in a big way led by Amazon. Bunch of upgrades, huge day for Amazon, one of its biggest gaining days in recent memory, and looking back at all-time highs. So we're going to have to see a bear sweep on the rest of these earnings reactions, whether it's Microsoft on Wednesday or next week when we're looking towards Amazon and Apple and all of our other names. But anything less than a full bear sweep on tech sector earnings, and that's not going to be the reason that the market bulls lose their momentum. So we certainly know that weakness can come out of nowhere very quickly, but as of right now, daily uptrend, bulls keeping full control, no sign of weakness. At a bare minimum, I will have to see a loss of the daily uptrend in the S&P 500 to be looking at anything notable for the bears. IWM consolidating on the daily. Again, tech and healthcare, which are the biggest holdings in IWM, didn't do anything today. So IWM didn't do anything today. Short-term support is 144.79. Gap to fill 141.98 if that level were to break. And as far as resistance goes, 147.59, 147.78, 140, no, that's it. Those two little short-term resistance levels, and then back to the high of the COVID bounce. So weaker due to the fact that we don't have as large tech holdings. QQQ surging back up towards the all-time high, our tightening range, breaking bullish at 262.69, and bulls not looking back at all. And it's just an all-time high test. If we reject from the all-time high, anything above 255.62 will keep the daily higher low pattern intact, and we have not lost the daily higher low pattern at any point in the last couple of months. So healthcare hit an all-time high today, but didn't really do anything else. So short-term support will be the low of today. If the low of today breaks, we'll then be looking down at 103.72 as the next support level on the daily. But blue sky breakout, just not really very forceful and lacking follow-through today. But again, that's fine as long as tech's going up. That's going to keep the S&P 500 strong. Financial sector, gap down open this morning. We had a gap to fill at 23.75. We filled it to the penny. And now let's see if the bulls can keep the daily uptrend intact. I would be considering anything above 23.25 as a daily higher low. And as far as the weekly time frame is concerned, I am still looking for a weekly lower high in the financial sector compared to 26.83. Biotech sector, all-time highs today. Anything above 114.56 will be a daily higher low. And we're just looking up at psychological resistance levels because the bulls are extremely strong. So we got all-time highs in healthcare, biotech. QQQ is close, but not there. And XLF is certainly very far away. And they're offsetting each other a bit. Tech sector strength, offsetting financial sector weakness. And there is a reason that SPY holdings have increased towards the tech sector significantly over the last year. And I wish I had it plotted on a chart. I don't have that information. I just know from checking in where it used to be tech sector, and then the financial sector, and now it's tech sector, healthcare sector, cyclicals, financial sector, and the tech sector holdings just continue to climb. They're in the low 30% now. I can remember back when it was in the low 20%. Semiconductors, same 4-hour tightening range, breaking bullish, and SMH 164.05 is the only resistance level, the all-time high. So everybody's breaking this 4-hour or daily, whichever time frame you like better, tightening range bullish, led by QQQ. And we had other names. Google was a lead bull today, breaking that same range. Google's looking at the all-time high. Facebook is testing that resistance. NVDA just broke over the resistance at the end of the day. Those are all names that have the same pattern, and they're all breaking bullish. Roku is one that has the same pattern and is not breaking bullish, watching for it to tighten up further on the daily. But bull breaks is the theme of the video. And SMH following along. We'll see if we get the all-time high tomorrow. The VIX is weak. We're at the low of this period of consolidation, and 23.50, the lowest price since the COVID dump, is the only level left. I guess it's not a price, it's a value. I know someone cringed inside and wanted to type a message to me real quick that it's not a price. So the VIX value, 23.50, is the only level down here. And next time we bounce on the daily, anything under 33.70, just a daily lower high. Gold bulls following through, not convincing, but we did break by a couple dollars. So the daily higher lows, the daily 12-period exponential support, keeping this move in control of the bulls. And a way more convincing break on silver. Daily bull flag confirmed, and we broke resistance by about 2%. So 2% as opposed to $2 on gold, very big difference. And silver bulls convincingly following through, and as long as the daily uptrend is intact, these bulls have complete control. Miners following along. Again, ideal day, strong S&P 500, strong metals, and miners are back to the highest price we've seen in a very long time. The next resistance on GDX, now that we're over $40, is going to be really up at 42.08, and these are the highest levels that we've seen in 6.5 years. Obviously, that's very notable. Daily uptrend will continue to be our guide in the bull miners as well. Oil, trying to set a daily higher low compared to 39.31. We need a 4-hour trend change back to the bulls, so big bull move off the low today. But we will need a 4-hour trend change to convincingly set a new daily higher low. We do still have a double top at the high of the COVID bounce, but if we do not lose the daily higher lows, that doesn't matter. We know to be a bit cautious, but we're only going to be looking in the other direction if higher lows are lost, and that goes for the S&P 500 as well. Natural gas, more follow through on the bear break. The bulls were hoping that we were going to see a bear break with no follow through to keep the weekly consolidation healthy, but we are getting follow through under 165, which means, yes, we are looking for a weekly higher low, but the more we pull back from here, we start to favor a tightening weekly range into the rest of the summer as opposed to a weekly trend change into continuation. It's still possible. I'm just talking about probabilities. So the probability increases with this bear break on the daily with some follow through. Probability increases for a weekly tightening range as opposed to weekly continuation, which as of Friday would have had a higher probability. But that changes. Every day gives us new information, and every day with new information gives us new probabilities as to what's the most likely scenario. So bulls keeping complete control. I had a pretty uneventful day. Could be frustrating if I let it get to me just because I was sitting tight for 2 days watching for Tesla's break, and I fell asleep on it today. And I fell asleep because the bulls proved nothing, and we saw only weakness to start the day, while QQQ, which has been correlating with Tesla over the last week, and I've been using it and using that correlation to my advantage, day trading Tesla consistently for the past 2 weeks. And today, QQQ just fine, V-shape for the bulls. Tesla did not participate at all. And we had a tightening range, and I actually made a bearish entry within this tightening range where I said, okay, Tesla bulls are not responding to QQQ or SPY strength at all. So any weakness in those names, and Tesla's ready for a bear break. So I looked at the lower highs and I made a bearish entry. Didn't get any follow through. Took half, tiny profit, and ended up with a tiny loss, getting stopped out on this move. But did not expect that kind of follow through on this 15-minute tightening range breaking. And there was some, news, some big players pumping the fact that if Tesla comes out with positive profit in the next Q release, which is Wednesday, then they will be eligible for the uplist to the S&P 500, and there will be funds that have to buy. But that's nothing new. We've been hearing that narrative for the last 2 weeks, more than the last 2 weeks, and that's why we've seen such a significant move to their all-time highs. So the lesson for me is, don't fall asleep. It was a clear 15-minute equilibrium breaking bull. I never in a million years would have expected this follow-through from that break, but I could have stopped out and flipped bullish. So a little lesson for me. And I did trade it afterwards with all that volatility in both directions, but missed the meat of the move. Other than that, I've got my geo swing going. Private prisons, if you watch the videos, you know I don't like private prisons, so I'm shorting them. I love the monthly, weekly, and daily downtrend that has been intact for 3+ years at this point, and the more likely it becomes that Biden could win, the more these stocks are going to go down. So I entered bearish a few days ago, sold half today, and I'm going to ride that other half, hoping for a break of 1052, but re-entering the half that I sold today on a daily lower high the next time we bounce. Other than that, fairly uneventful day for me, even though there were a lot of fireworks on a lot of bull names out there, so congrats to the bulls that took advantage of it. I'm a bit busy this week, so pumping the brakes. When you got stuff going on that distracts you and you're not in the zone 100%, gotta pump the brakes. So I've got other stuff going on, and that will hopefully end by Wednesday or so, and then I'll be able to give it 100% attention. But if I'm only giving it 85% attention, I'm only going to be taking 85% of the trades, if not less. Have a good rest of your day, and I'll see you tomorrow. So I feel I've never told you the story of the ghost that pushed me in the back, and I got it on film here. And I will do a little run through here so we can see exactly what played out. So nice bright morning, great day, bowl of cereal, happy-go-lucky, working in the yard. It's a weekend day, just a young guy, almonds in his pocket, throws some almonds to the squirrels. How you doing, squirrels? Eat some breakfast with me right here. So you'll see on my back 2 handprints right there. So they got me. Big push from behind. And you might be saying, why are there cushions on your top step? That's dangerous. And my answer is, my dog Sweetie Pants likes to sit on them and overlook the yard. So they're staying. Now let's go with, how did I react? So clearly I realize at this moment, I'm in trouble. My foot did not land on the stair where I thought it would. How can I recover and not go headfirst onto the brick? And the answer is with a ninja hop. Ninja hop successful. We are no longer going headfirst, but we're out of control. So there's some sunflowers here. I'm headed straight for the sunflowers and straight for the railing. Impact is inevitable. There's your impact. Check the serial. 50% serial recovery rate. Very pleased with that. Assessing the situation. Catching my breath. Fixing the cushion. And sitting down to enjoy my cereal. In the end, bruised ribs. Bloody toe. Ghost. Captured on film. And we'll just give it a one-time run through. Shout out to the squirrels. Ghost push in the back. The good news is it's a plastic railing. This is all wood. And when I moved in, I thought, I don't like these plastic railings. If that were wood, I could have broken a rib. But it had a nice amount of give on impact. And the wood railings would not have had that kind of give. And it would have been a different story. So, plastic can stay for now. That's my ghost story.